Welcome back to the Wall Street Podcast.
Great to be here.
Today we're doing a deep dive into a Citi Research report. It's titled China Healthcare, 1H25 Results, Wrap, Stock Picks, and it just came out on September 8th, 2025.
That's right. It essentially takes the pulse of China's healthcare sector for the first half of this year, 1H25.
And the main takeaway seems to be a bit of a split picture.
Exactly. You see real strength, leadership even, in areas like innovative pharma, medical devices, CXO services, and internet healthcare.
But other parts are struggling.
Yes. The more consumer-facing segments, think hospitals, traditional Chinese medicine, medical aesthetics, they're facing headwinds. Soft consumption is the main issue cited.
Okay, let's break down those stronger areas first. Innovative pharma and biotech.
Showing really solid organic growth. But what's particularly interesting is the out-licensing aspect.
The global business development deals.
Precisely. China's now involved in over 50% of global out-licensing deals year to date. That's a huge number.
Driven by what? Policy support?
Policy is definitely a key factor. Things like inclusion in the NRDL, the National Reimbursement Drug List are crucial. It secures domestic market access, which sort of funds and validates the innovation for export.
Makes sense. It shows a real shift towards China as an innovation source, not just a market.
Absolutely. A move from fast follower to, well, innovation exporter.
Okay, moving on, medical equipment. What's the story there?
Growth, but primarily overseas growth. That's the big headline.
Examples?
Well, Mindray is reporting half its revenue now comes from international markets, 50%.
Impressive.
And Microport Medbot, even more striking, 58% overseas revenue. And that figure grew 189% year over year. Just massive growth abroad.
What about domestically? Any movement?
There is some. Domestic tendering was up 18% year over year in July. Seems fiscal stimulus is helping there, but still, the overseas expansion is really driving things.
Right. Leveraging technology and maybe cost advantages globally.
That seems to be the combination. Cutting-edge tech, cost efficiency, plus established sales networks.
Okay, let's touch on CXOs and internet healthcare. You said robust results.
Yes, strong 1H25 for the leaders in the contract research and manufacturing space. Those geopolitical concerns seem to be less of a drag now.
And there was a point about financing.
Huge surge. Primary market financing for innovative drugs in China jumped 466% year over year in August.
Wow.
And that correlates directly with new bookings for CROs, the contract research organizations, so a positive sign for that ecosystem.
And internet healthcare, prescriptions moving online.
Yeah, the RX outflow to cheaper online platforms is a tailwind, but the really interesting angle is AI.
How so?
Artificial intelligence is driving major efficiency gains. Ping and Good Doctor is a prime example. They cut per customer service costs by 52% using AI.
52% is substantial. That goes straight to the bottom line, presumably?
It certainly helps margins and, the future valuation story for these platforms, especially when consumer spending is a bit soft elsewhere.
Which brings us back to those challenge sectors. Hospitals, TCM, medical aesthetics, still weak.
Still weak in 1H25, according to the report. It really highlights their sensitivity to overall consumer confidence in spending.
Any specific data points?
Well, for traditional Chinese medicine, its share within retail pharmacies actually dropped. It was 42% back in 2022, down to 36% in the first half of this year.
So those areas are waiting for a broader economic pickup, it seems.
That appears to be the case. They need more macro support to really turn around.
Okay, let's pivot to some deeper commentary. First module. How is China really positioning itself as a global leader in biopharma innovation?
Well, it's multifaceted. First, consistently developing first-in-class assets, genuine novelty. Second, securing that dominant share over 50% of global out-licensing deals proves the capability.
And the domestic support.
Crucial. The NRDL inclusion we mentioned, plus growing engagement from commercial insurance, creates a strong home market. That base de-risks and funds the innovation needed for global export. It's a strategic loop.
I see. Module 2. What enables Chinese medtech firms to penetrate international markets so effectively?
It comes down to a few core strengths. They're using advanced tech to create competitive products. Often these offer better cost efficiency than established players.
Value proposition.
Exactly. Combine that with increasingly sophisticated global sales networks, and they can push effectively into overseas markets, especially those that might be underpenetrated. They're simply outperforming their domestic growth rate by focusing globally.
Makes sense. Final module. How is AI reshaping internet healthcare's economics, especially now with consumer spending shifts?
AI is acting as a powerful catalyst for efficiency. As we saw with Ping and Good Doctor, it drastically cuts operating costs, specifically per customer service costs.
By that huge 52% figure.
Right. And that directly translates to potential margin expansion. It makes these digital health platforms more resilient, economically viable, and boosts their valuation potential, even if consumer spending is fluctuating. It's a structural improvement.
Interesting. Now let's talk impact on the general public. There's mention of a specific policy.
Yes, the fiscal interest subsidy policy on personal consumption loans. It kicked in September 1st, 2025, and runs until August 31st, 2026.
What does it do?
It offers a 1% annual subsidy on personal consumer loans, specifically for services like orthodontics, vision correction, health management, those sorts of things.
So aimed at making some of those pricier, often elective healthcare services a bit more affordable for you, the consumer.
Precisely. It's a direct attempt to make certain types of healthcare spending more accessible.
Okay, let's wrap this up. What's the final thought you want listeners to take away from this deep dive?
I think it's about seeing the bigger picture here. You have accelerated innovation, aggressive global expansion, and the strategic digital transformation all happening simultaneously in China's healthcare sector.
A powerful combination.
Very. And you should consider how this confluence isn't just changing China's domestic market. It's positioned to potentially redefine patient access, economic models, maybe even public health approaches on a global scale. It's something to watch closely.
A fundamental reshaping potentially underway.
Definitely food for thought. Thanks for walking us through the report.
My pleasure.